Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, June 27th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the usual S&P 500 E-mini futures. You'll see that the futures are flying high again. They're higher by about 9 points at the moment to 1604.5. It looks like we just had the weekly initial jobless claims report released, and the markets are liking the number. So far, this is what we're seeing. The markets already were higher anyway, as you could see, going into the jobless claims number. But weekly jobless claims coming in at 346,000. That's a decline of 9,000. So market likes that number. But what this number does, it just tells you that the central banks really need to raise interest rates, and they need to cut the quantitative easing. So I don't know why good numbers are viewed as good for the stock market. They maybe should be viewed as good for the economy, and rates will have to be let go by the Federal Reserve. They'll have to stop their quantitative easing, and we'll watch the 10-year bond yield. Right now, the 10-year bond yield is trading around 2.49%. It's down a few ticks, but nonetheless, hovering right around that 2.5 level. If bond yields go higher in the 10-year note, I think that traders should be a little bit careful, because we could see some declines in the market overall. Stocks would come under pressure, most notably mortgage REITs, housing stocks, home builders, and obviously utilities. So that's something to watch for going forward. Couple of other things that we want to talk about today is more about China. We take a look at the Chinese market last night. It had a I got to say, a little bit of a wild session. I'm going to pull that chart up, and you'll get to see it. I only have the daily chart available, but nonetheless, we'll get a glimpse of it. What happened in China last night, we moved a little higher, came down. All in all, China finished lower on the session. It wasn't a big down day by any means, finishing really right around the flat line for the most part, but wasn't able to really break out or break above this bottoming tail high. Now, we're going to have to watch this pattern over the next few days, because it could tell us a lot more. But nonetheless, Chinese market holding steady, but it really was unable to get anything going. Now, the Nikkei 225, which was Japan, that had a nice little move last night. That was a pretty good little pop there. But overall, it's just a lot of choppy consolidation down here for the Nikkei 225. We're going to keep that on our radar as well. But right now, from what I could tell, is that just a lot of choppy consolidation. Markets really haven't gone all that far, but they've held up, and they may hold up into next week or even a week after that. So we'll have to watch these Asian markets closely. But the Asian market's going to be very, very important. There also was a rebound last night in the Bombay Sensex index that was up 1.75%. So traders, you want to keep the Indian ADRs on your radar today. The India Fund, the IFN, this could be a candidate to catch a little bit of a bid. So keep that on your radar today. Also, some of the major Indian ADRs, Tata Motors is one of them. Infosys is another one. So just keep that on the radar. Indian ADRs could be pretty strong today if the U.S. markets are strong. So there was a pretty solid night last night in India. There's a few stocks out here. We have a few gap plays this morning. They'll be posted up at 9 a.m. KB Homes came out with earnings today. Ticker symbol is KBH. That stock really is not doing all that much. It traded at finished yesterday around 1989. Today it's trading at around 2015. Had an initial spike up, but has come back in. So really no strength in KB Homes from what we could see. That was pretty much the big stock that reported earnings. Conagra is another stock that reported earnings today. This one is gapping up a little bit. It closed at around 33.35. It's trading at 34.28. We'll see if it go up a little bit higher. I'll have a gap play for that one. Right now, there's not much we would do with it. But we do have a couple of other stocks out here that are showing us some gap plays, and those what we will be playing this morning at 9 a.m. And like I said, I'll post those up in the chat room with the numbers and all the levels at 9 a.m. Looking over at gold market this morning, what you're going to see is that gold is trading higher by about $5. So spot gold is trading at around $1,235 an ounce. Gold has been was slammed yesterday, but today, it's getting a little bit of an uptick, a little bit of a bid. Nothing to write home about. What you want to watch for gold is the U.S. dollar index. When you see the U.S. dollar index trading lower, that means gold will generally get supported and catch a little bit of a bid. You could just take a look at the daily chart of the U.S. dollar index. It's been soaring now for about 6, 7, 8 days, and when the dollar makes a move up like that, gold will suffer, and that's exactly what's happening at this moment. Why is the dollar strong, you may be asking? Well, it's not that the dollar so much is a strong currency. It's a world's reserve currency, and the other currencies around it, like Japan and Europe, the euro, the Japanese yen, they're all printing so much money and deflating their diluting their currency that the dollar goes up by default, and that's really what's happening at this time. But keep it on the radar. If the dollar sells off or pulls back, gold will get more of a bid. The same case could be made for oil. Light sweet crude is up about 50 cents today to just under $96 a barrel. Light sweet crude is the type of crude that we use predominantly here in the United States. If you take a look at the USO, it's a good proxy for crude. And what you'll see here is that light sweet crude, or USO, is trading at just under $34 a share. So a decent little pop. It closed at $33.80. Light sweet crude is holding up pretty well this morning, and that's on the back of a slightly weaker U.S. dollar. A couple of other things you want to note today is there's still a fair amount of economic news. I know the big news report for the markets was going to be the weekly jobless claims. Sometimes it's a mover, sometimes it's not. You also had personal income out at the same time. Sometimes that's a mover, sometimes it's not. I think the market right now cares about the bond yield on the 10-year Treasury Note. So that's really what the market cares about. You're going to have some more economic data out at 10 o'clock. I believe you're going to have May pending home sales. That will be released at 10 o'clock. And then you're going to have a little bit of data due out at 11 a.m. I think it's going to be something from the Kansas City Fed manufacturing survey. Not sure if that will be a big deal. But what will be a big deal is the amount of Federal Reserve board members that are going to speak today. You're going to have a board member speaking at 10:30. I think that's Jerome Powell. After that, you're going to have Atlanta Fed President Dennis Lockhart speaking. I think that's at the noon hour. And then later this afternoon, you'll have the New York Fed President Bill Dudley speaking as well. So it's pretty, safe to say that the Federal Reserve is out there trying to churn this market via these Fed governors. They've been out ever since the market took that big nosedive, and they've been out there trying to say, hey, QE-3 is not going to end. You misinterpreted Bernanke. I don't think anybody misinterpreted Bernanke. I think for the first time ever, Bernanke was pretty clear on what he said. But either way, you get this kind of double talk from the Federal Reserve. Is the economy ready to stand on its own 2 feet without training wheels? Is the drug addict ready to get off the methadone? That's really what it comes down to. And apparently it's not. So we'll have to watch this market each and every day. Again, coincide everything with the chart pattern, with the cycles. And this is the reason why we use charts and we don't listen to Fed governors or to the Federal Reserve chairman or anybody else out there. We just listen to the charts. With that said, everybody, I'd like to wish you all a great trading day, and we'll see you on the charts.